Hey everyone, this is Ryan B with Practical Forex Trading, and this is your weekly video for silver price. So silver versus the US dollar. If you want to stay up to date with all of our silver videos and other commodities and currency pairs, make sure you click that red subscribe button in the bottom right hand corner of the screen. Okay, so looking at this chart, we see that price is now moving to a bearish formation, meaning more selling ahead. So we look at this line here around the $14 mark, and we consider that support, meaning in the past, price has stopped there and turned the other way in one direction or the other, meaning it becomes then defined as support and resistance. So as long as price stayed on top of that line, we saw moves back away from it, going to a higher value. Now we see that price, so last week's price has closed below this line. So let's go ahead and zoom in a little bit. So these are candles, meaning each one of these represents 1 week of price action. Red meaning that the week finished off lower than it started. Green meaning the week finished off higher than it started. So this tail here indicates that price dipped all the way down to $11.66, but then pushed back up to about $12.60. That can happen for one of two reasons. Either people do enough buying that push prices back up, or people do profit taking and then price slowly kind of trickles back up because they were shorting it and they want to then cash out, or there was just so much cashing out that prices bounce up back up for a little bit. So when we look at our big weekly channel, we see next support ahead at around $8, maybe $8.50. Let's pull this down. $8 to $8.50. So we see the last time prices visited there about mid-2008. So that was that last global financial crisis. We saw prices dip all the way to there. What's really interesting about it is that most people who are into selling gold and silver futures always insist that in a time of crisis, precious metals will be the only thing worth anything, but in fact the markets typically respond with a large sell-off in those type of events and resort for the haven of the US dollar. So let's go ahead and draw a trend line. This is our long-term descending trend, and we see that price has been stuck in this bearish descending triangle since 2011. There we go. Now trends are approximate and they are relative and up for interpretation of the person who's drawing them. But you want to get a general idea of the series of highs and lows and how they connect. So here we go. We see that price was really moving in this triangle for years and years, never really getting beyond the $19 per ounce mark. We see recently that price went all the way up to 18, then there's been a huge sell-off down to 12, so we might be able to soon buy silver at $8. If we see $8 support violated, the next support would be at $4, which might be a really good buying opportunity. So let's try to find a trend in all this. This chart only goes back so far, so apologies for that. But we see that we're kind of in an unprecedented territory for this millennia where price really has stayed above the 850 mark. We see prices now heading back for that price. So will it be a good opportunity, or is silver kind of donezo for now in regards to value? The next few weeks should give us a pretty good picture. Let's look at the daily. Okay, here we see that Friday prices closed with a strong bullish candle, meaning we should probably see a retrace here pretty soon. Let's go ahead and look where that might be. So if we remove this line, let's apply our Fibonacci tool, fib retracement. Then you want to click on your recent high and you click on your recent low. Okay, so we can see this will tell us that price could retrace all the way to 23.6, and that might have been it. We might see more selling right from here. That was like a weak retrace that happened at the end of last week. Or we could see price come up to the 1441 mark, meeting the 38.2 Fibonacci retracement mark. that would make sense because it might meet up with the fast moving average, and then potentially we could see our next sell-off. However, when we look at this zone, right, we think about, well, if price does move back above $14 per ounce pretty quickly, that's okay, and the bull can, prices should stabilize from there. Or if prices come up to that line to about 14.50, and then we see another big sell-off and they close below that point, then it's the likelihood of prices returning to, say $18 becomes less probable. So let's go ahead and draw a parallel trend channel. So this is our big overall trend, right? It's our rough guesstimate on price sequential highs over time and how they're getting lower. Take a parallel trend channel tool, and we can kind of map out the bottom of that channel, right? Price moved down, up. Now it cracked through the bottom, meaning so the next place, let's drive one more. Think of these parallel trend channels as support and resistance zone through time. Okay. And now, if they're equidistant, if they're about equally as wide, right? This one's about this wide, this time frame is about this wide. Prices are pretty likely to just ride along the bottom of that, or if they move into it, they'll get eventually forced out by the moving average by selling at this $14 mark. That's really what's happening, is it'll be a mass wave of selling. So if you're holding silver right now, you might want to look for the next retracement to $14, and then get back in the game into buying when prices go down to about the $8 mark. Okay, I wish you all a lot of profit this week. I hope you have a good time trading. Please stay safe. Thanks.